What happens when a bank stops thinking like a bank? Instead of keeping the status quo, it challenges it. Instead of thinking about how people should bank, we should think about how we can improve their lives. Instead of just offering products and services, we create experiences. When a bank stops thinking like a bank, it changes the game. This is what we're doing. We're bringing the future of banking to the present by being forward-thinking, innovative, agile, and open. The future is not an upgrade of the present. It's about doing things in an entirely different way. It's not just about creating products and services, but about bringing the bank to our clients wherever they go. The future is about embedding banking into everyone's lives. To accelerate your growth, we are connecting you to a whole new world of opportunities. To drive you to success, we're powering the future with advanced technology and platforms. So forget what you know about banking. This is our revolution. We are transforming every transaction and interaction because we don't want to interrupt your life. We want you to enjoy it. We don't want to just support your business. We want to help you build it. The future is here now, and we are just beginning. We are going to transform the lives of all Filipinos. We are a company of future-forward thinkers, committed to bringing dreams to life. And our focus is entirely on you. Because at Union Bank, the future begins with you.
Just listen to what you make everyday exciting.
I want to make you smile. Kaya when it's time to eat, dapat laging special.
San Marino Corn Tuna. Punong-puno ng flavorful tuna that's rich in omega-3. Lasa pang sarap in every bite.
I'm glad I get to celebrate each day with you. Pasarapin ang love
with San Marino.
Welcome back to New Day.
We've got all the news you need and more.
We still have here with us members of the national women's football team who just won the title at the AFF Women's Championship.
Dadalo si President-elect Bongbong Marcos sa Asia-Pacific Economic Cooperation o APEC Summit sa Thailand.
Ngayong No Smoking Awareness Month, alamin natin kung paano tuluyang magkukwit.
A South Commuter Railway linking Metro Manila and Laguna goes full steam ahead.
Nakipagpulong ang Pangulo kay Indonesian President Joko Widodo at tinalakay nila ang iba't ibang hamong kinakarap ng ASEAN dahil sa pandemya. Itutuloy na ng Cebu City ang pagluluwag ng pagsuot ng face mask pero ayon kay Mayor Mike Rama, ito ay trial period pa lamang.
President Ferdinand Marcos Jr. brings home over 800 billion pesos worth of investment pledges from his state visits to Indonesia and Singapore.
Humingi na ng saklolo ang grupo ng mga panadero. Apektado na rin daw ang kanilang industriya.
Ayon sa Labor Department, inaprubahan na ng National Wages Productivity Commission ang 50 pesos na dagdag sahod.
Not all information are created equal. With an abundance of sources on different platforms, experience is essential. Excellence counts. Integrity matters. Because decisions and strategies are only as good as the information you base them on. For the past 35 years, Business World has been at the forefront of business news, helping shape our country's development through the leaders and people of influence who count on the paper as their primary news source. The information delivered through the pages of Business World enable decision makers to achieve important milestones as they rise and thrive even in challenging times. As Business World evolves with its audience, it has brought its legacy of reliable and credible journalism to new media to deliver more beneficial services to our growing audience. Business World is committed to having its valuable and compelling content flow seamlessly from the paper to digital, social, mobile, video, and TV to reach the people where they are. With the Philippine business landscape in a state of constant transformation, Business World will continue to evolve with the needs of its market. Despite the changes, some things will never change. Excellence anchored in untarnished integrity, now and always.
Sign up for a year and pay less than 71 pesos per month. Visit tmt.ph/digital to get your free 30 days of the Manila Times Digital Edition.
This year's FINEX annual conference would not have been possible if not with the support from our sponsors and partners. We would like to thank our sponsors: Platinum sponsors, KPMG RG Manabar & Company and Union Bank of the Philippines. Diamond sponsors Megaworld, Noasis Corporation, CDO Foodsphere Inc., and Vista Land. Gold sponsors: All Home, Ayala Land Inc., Deloitte, Institute of Management Accountants, Robinson's Land Corporation, Filipina Shell Petroleum Corporation, SGV and Company, and Smart Communications. Patron sponsors BDO Unibank Inc., PNA Grant Thornton, RCBC, FTI Consulting, San Miguel Corporation, and St. Peter Life Plan. Minor sponsors McDonald's and Wilkin Depot. We would like to thank our official broadcast partners, ANC and CNN Philippines, and our media partners, Business Mirror, Business World, Manila Bulletin, Philippine Star, and the Manila Times.
Good morning. Welcome to the fourth day of 2022 FINEX Annual Conference. Today's session is about financial inclusion as enabler for transformational change. This webinar is presented by the FINEX Week Committee. Our host for today is a trustee for FINEX Research and Development Foundation, Inc., and the President and CEO of PowerNet Systems, Inc. Let us all welcome Mr. Antonio Ramon T. Ongsiaco.
Good morning, everyone. Let me just start my video. I think I've already started it. Welcome to the fourth day of FINEX Week. There we go. Yeah. Welcome to the fourth day of FINEX Week. And we will be having today the financial inclusion as an enabler of transformational change. I am Tony Boyong Shaco, your host for today's virtual event. And before anything else, on behalf of FINEX Week Committee, I would like to thank the following sponsors and partners for making the annual conference happen. KPMG Manabat and Company, Union Bank, MegaWorld, CDO Foodspear, NOAA Business Application, Vistaland, All Home, Ayala Land, Deloitte, the Institute of Management Accountants, Pilipinas Shell Petroleum Corporation, Robinson's Land Corporation, Smart Communications, SGV, BDO, FTI Consulting, PNA Grant Thornton, San Miguel Corporation, RCBC, St. Peter Life Plans, McDonald's, Wilkin Depot. By the way, in St. Peter's Life Plan, I think they have a promo now. So try to check that out. Okay, to formally open this program, let's call on our president, the very good-looking Mike Guarin, to give you a welcome remark.
Thank you, Tony Boy. Good morning to everyone, to our FINEX officers, members, guests, and all the participants. Welcome to day 4 of our 54th FINEX Annual Conference, Reshaping the Future with Transformational Change. And as mentioned by Tony Boy, today is day 4 already, and our topic for this morning would be financial inclusion as enabler for transformational change. And I'm looking forward to hearing from our panel of experts, both here in the country and abroad. So as you know, as a financial community, it will be crucial in the wake of the pandemic that players and stakeholders come together and think about ways in which we all can help build greater financial inclusivity. Part of this rests on ensuring that systemic financial resilience of the system as a whole are needed. So discussions are needed on what blended financial solutions can play a part. And as discussed yesterday during the hybrid session, there are different products for different requirements of the market. Then why is it important? Because if done correctly, it will help raise the tides for all of us. We can choose to recognize that financial inclusion spans a complete spectrum of needs, not just our day-to-day banking, but also it will help affect the insurance sector, savings, credit, and pensions. it will be vital for all organizations and stakeholders to collaborate to drive new, innovative solutions. Undoubtedly, technology will have to play a big role. The pandemic has shaken up our world and created a new reality. So one of this is that it is even harder to be financially exclusive, right? So to be financially excluded. So let me repeat that. Given our world today, it is harder to be financially excluded. So now that in reality, that's what we are seeing, let's make sure that those who are excluded can actually be included into the overall financial community. And hopefully we can gather new ideas, or maybe the discussions today can help confirm some of the things that we have been doing in our respective companies and organizations. So again, more power to the FINEX Week Committee. Thank you for putting all of this together. To our liaison director, Gemma Cheng, good morning. Co-chairs, Migs Ramos and Renan Piamonte. Our technical subcommittee chairs, Tony Boy, wearing several hats, and Paulo Azurin. To our Ways and Means subcommittee chairs, our co-chairs, Goody Hernandez and Frank Isaac. To our publication and promotions subcommittee chair, Blanca Mercado. To our FINEX Night subcommittee chair, Jet Pampolina. And to Ochi Quito and Bing Pasco for helping with all of the hotel arrangements. And then lastly, I would like to again express my sincerest thanks and appreciation to our corporate sponsors. Platinum sponsors, KPMG, RG Manabat and Company, Union Bank of the Philippines. To our diamond sponsors, MegaWorld, CDO Foodsphere, NOAA Business Applications, and Vistaland. Gold sponsors, All Home, Ayala Land Inc., Deloitte, the Institute of Management Accountants, Robinsons Land Corp., SGV and Company, Pilipinas Shell, Smart Communications. To our patron sponsors, BDO, FTI Consulting, PNA Grant Thornton, San Miguel Corporation, RCBC, and St. Peter. To our minor sponsors, McDonald's and Wilcon Depot. To our broadcast partners, ANC and CNN. And to our media partners, Business Mirror, Business World, Manila Bulletin, Philippine Star, and the Manila Times. Again, thank you all for being here, joining us in this morning session. And enjoy the sessions, and mabuhay ang FINEX. Back to you, Tony.
Thank you very much. Thank you very much, Mike, President Mike. At this point, the FINEX Week Committee has a short message for everyone. Okay, so may I now invite the FINEX Week co-chair, Renan Piamonte, to do his welcome remarks. His remarks, sorry.
Thank you, Tony Boy. Good morning again, everyone. I can see our distinguished speakers in the call. Thank you very much for joining us and sharing your expertise in this very important topic. To the audience, thank you very much for joining us. I'm sure you are eager to hear more about financial inclusion. As you know, we had a face-to-face session yesterday at Fairmont. All topics that we pick for this year's FINEX conference are based on the current and emerging risks relevant to the Philippines. We actually had financial inclusion as one of the topics yesterday, but due to the importance of this particular topic, we thought of having another session, but at a different angle. If yesterday's take was largely from the points of view of the regulator and the intermediaries, we want today's session to focus on what's happening in the international scene, especially at this economic climate, because as we know, economic downturns or potential economic downturns disproportionately affect the marginalized sector. I invite you to take an active role in this session and interact with the speakers. Thank you again for your participation, and thank you for the committee leaders and members mentioned by President Mike. Again, good morning.
Thank you very much, Renan, for that. And now, let's start the session. I will introduce the first speaker. He is the Chief Executive Officer of the Small and Medium Enterprise Finance Forum at the International Finance Corporation, and he has over 35 years of experience in private sector development and finance, with a focus on the role of commercial banks and non-bank financial institutions in broadening and deepening services to households and enterprises previously lacking formal finance. He holds a BA and MA from Harvard University and an MS and a DPhil from Sussex University, UK. Let us all now welcome Matthew Gamser. Matthew?
Thank you, Tony Boy. Thank you, President Mike. Thank you, everyone. Thank you, Renan. Thank you, everyone from FINEX for having me back a year after I spoke to you. That's a great honor to be invited back, but it's also quite a challenge because, you know, it's 1 year on. I have to say new things. And there are many people in this audience who may still remember what I was talking about last time, and I don't want to just sound like I'm going to tell you the same stuff. The one thing I am going to say, and that's despite what you've heard about how COVID, how all the inflation, the war in Ukraine, all this has definitely really set us back in the world, and we have moved a lot of people that we had moved out of poverty back into poverty. But despite that, the one message I'm going to tell you that's the same as the one I told you last year is that financial inclusion is something that all of you business people need to think about, not as a social obligation, but as a business opportunity. And that the more we continue to innovate in the finance space, the more we are seeing these real opportunities to do things that are very good for all of us, but are also should be good business for you. And so Gay asked me to focus on some of the latest things we've been doing in the SME Finance Forum. And so if I can share my screen, let me see if I can do that. Do I have access to screen sharing? Yes, I will do that. So I'm going to share my screen, and hopefully that's going to take you to my presentation about why care about financial inclusion. And as I told you, my message is going to be the same as last year, but I'm going to bring up a lot of new material. And the reason you should care is because reaching out to include is reaching out to new markets where there is a need, where there is real strong economic demand, and where therefore there are good margins and good business to be had if you approach the business in the right way. So let me remind us all why, in particular, with respect to financial inclusion, we need to think about SMEs. I don't think I need to tell this audience that in your part of the world, in every part of the world, SMEs make up the bulk of employment, a huge portion of economic growth, and also access to essential goods and services, access to innovation. SMEs are key players in all these. But many, I would say most financial institutions are still struggling to serve the SME market. The technology that has developed to bank corporations, to finance consumers has really not worked very well in that middle ground of the very large and important SME space. But then was then and now is now, and we're going to talk about what is changing that can enable much more of this to happen. So just a little infomercial, since your sponsors got so much time and attention, I'm very jealous in the beginning of this. They really got their money's worth in the beginning of your show. I'm just going to remind you that the SME Finance Forum is a creation of the G20 countries. It's managed by the IFC, the private sector arm of the World Bank, and it now is a membership network of more than 240 members and partners working in just about every country in the world. And basically, the SME Finance Forum helps our membership to learn from each other, to link to new business and partnership opportunities, and to lead the industry voice in high-level policy dialogue with our parents, the G20 and the World Bank Group, and many other key policy bodies. I want to talk about what happened just 2 weeks ago when we were in Cambodia. For the first time, we'd held a physical meeting in 3 years, our Global SME Finance Forum, which moves around the globe. And we managed to get over 350 people physically and over 280 people virtually at a high level to come join us from over 60 countries and over 180 institutions. And this discussion Why is it relevant to this meeting? It's because we focused on digitalization and how key digitalization is to where we are going in the finance industry, and in particular, where we are going in financial inclusion, because without the digitalization of financial institutions and financial products and financial infrastructure, we are not able to include. But as we have seen from, among other things, the World Bank's FINEX reports and others, that digitalization is making a game-changing, very significant difference in inclusion around the world. And it should be in the Philippines. And as you saw, as you did in the infomercial for Union Bank, one of our members of the SME Finance Forum, you saw some of the digital innovations that they're using in their own infomercial that preceded my talk. Now, I just thought you might find it interesting what the people that came to our meeting said are the priority issues they're looking at. And you can see what a strong priority digitalization and digital financial services, digital transformation has in this across the different types of institutions that work with us. Also, it's very important to note here, because I'm going to come back to this point, that both supply and value chain financing and sustainability are growing priority themes. Let me tell you a little bit about the latest information. This OECD isn't even published yet. It is now it's OECD scoreboard data, so many of the countries maybe are not as relevant to the Philippines, but there are 31 countries covered here. They're noting that the state of the SME situation is that, and this is basically 2021 information, that SMEs had started to recover in 2021. I think we're going to see a little bit of a different story in 2022, but the lending to SMEs, which was very strong in 2020 because there was a lot of government push in initial response to COVID, started declining. That was for the traditional financial sector. On the other hand, alternative financiers recovered strongly in 2021. They were hit in 2020 because it was hard to get capital in the initial COVID shock to continue their work, but they managed to recover in 2021. And it's interesting that unfortunately interest rates started rising even as early as 2021, and of course that has continued into 2022, which they're not showing yet in the OECD work. But the most important maybe is that the policy mix is evolving. In 2020, it was all about direct support to everyone. Don't worry about if some of it's more like broadcasting seeds. If some of them get blown away by the wind, it's okay because we need to get the resources out there. Now governments are being much more targeted in their support, and they're looking at particular sectors that are important, and they're looking at key policy goals like climate change. So that's the OECD. Now let me tell you about data that just came out yesterday from our friends at Facebook Meta, who, as you may know, there are probably tens of millions of companies that are using Facebook, not only to do their marketing to customers, but more and more of them are using Facebook for payments and other things. And they have a very interesting survey that they do of SMEs in 30 countries. It's a little US weighted, that a little less than a quarter of the respondents are from the US, but they do have 30 countries in their survey. And it's a bit more diverse countries than maybe the OECD. They have found that SME closure rates are roughly constant. About 20% of SMEs have closed every time they've done the survey. The sales and performance, however, are continuing to recover despite inflation and some supply chain challenges. Employment also is continuing to recover across their overall data set. However, in the Middle East, North Africa, Latin America, South Asia, they are reporting employment declines. SMEs are reporting lower business challenges than they were a few months ago, but they are reporting that they're making price increases. So to some extent, they're passing on the impact of inflation on their customers, which I think is clear to anyone who's consuming now. And now, as what I think is important here is that it's showing from this survey that the challenges are shifting away from the direct challenges of COVID, the restriction on movement, the restriction on access in general, and now to new ones about how you stabilize the markets and how you adapt to the new reality. So as I said, the situation today is a challenging one. So unfortunately, that can tend to push traditional bankers who never have liked the SME segment very much. I'm sorry to say some truth that bankers don't usually utter, but it's going to make it even harder for them. But let us see. Here's what we've been doing. We've been updating our SME finance gap study in the SME Finance Forum and the World Bank Group. We don't have a new number for you, but you may remember that number was over $5 trillion worldwide for formal micro, small, and medium enterprises. And when you figured the informal in, it was close to 9 trillion. But what we are seeing is very similar to what you heard from the metadata. The initial operating and financial challenges have been joined by liquidity challenges, and there's been a greater squeeze on lending for SMEs. And so even as the overall economy is starting to stabilize in some places, obviously SMEs, as they always do, are taking the brunt of this challenge. On the structural side, there had always been factors suppressing lending to the private sector prior to COVID, and COVID has made things worse. So the obstacles have been bigger if you were talking about traditional financing. The approval rates on loans, loan disbursements by firm size and portfolio quality have gone down a bit. So that's a bit more pessimistic than what the OECD results are showing, but that we're talking about covering a much wider range of countries here in the IFC research. And there's still these global headwinds that could be altering the course of government interventions, as we all know. So another indication of the latest data, just literally this afternoon from, I'm sorry, I'm still in the evening on Wednesday, you're in your morning on Thursday. So if we think about just 12 hours or so ago, this is the latest data from our direct side. And lack of collateral and shallow cash reserves was already a problem in accessing credit for SMEs. We expect that the gap figures are going to go up with COVID. We don't have a lot of COVID data, so we may not show it as much in the new gap estimate as we will in another couple of years when we do it again. But there is action needed urgently to address the impact of rising inflation and surging debt levels. So, but as I said, many of you, this is still the way you look at the SME sector. They're a pain on you. They're a burden, not a blessing. Too expensive to acquire, too expensive to serve. So I did show this last time. I promised I'll be new, but I need to show an old slide. And I need to show one other slide that I showed, because last time a year ago I said, look, there are things that are changing the game, and they involve moving from cash payments to digital payments. And that's a barcode for those. I don't even, in Asia, maybe you don't even see those anymore because you're already all QR coded, but which is good. But, and in the way we do commerce, we still are mostly 14th century Venice technology, but we are moving more and more to digital commerce. And this is accelerating. The good news about COVID, as I said a year ago, is this is pushing more and more SMEs to digitalize their own business and the business they do with others. And if you yesterday evening Manila time, today morning my time, you joined our virtual marketplace in the SME Finance Forum. So I did say I was going to give you new stuff. You would have seen 3 examples of what all this is enabling to be possible. You could have heard from ClickPesa working in East Africa, where they are using a combination of digital payments technology, blockchain or distributed ledger technology, along with both stablecoin technology and the Stellar system, for those that want the gory details, to provide not only new opportunities for digital commerce and access to markets for SMEs, but they have a whole platform that gives the SMEs their own business ERPs, their own better information, better cash management, and this is going great guns in East Africa. You could also have heard about what's happening in Europe. I tend to rank on Europe and North America a lot, that they're too traditional. They're dominated by large financial institutions that have very antiquated systems, but there is stuff still happening there. And FINPOP is a group that is using, again, distributed ledger technology and NFTs to help democratize the finance of invoices throughout Europe, because small businesses have much more difficulty than larger businesses getting their accounts payable financed. But FINPOP was an example we heard this morning. And finally, closer to your home, Malex, which is based in the Gulf countries and India, is also using blockchain technology in the very important area of agricultural finance value chains. And you can see all the different crops that they are starting to use to put into their system so that they can finance the receivables and have much better full access to this key transactional information that is really what one needs to look at in order to go at SME financing much better. So just 3 examples of many, many that I could have cited. I've also want to stress, and I've just come from Cambodia where our meeting was, that governments are also prompted by COVID, they're, including your government, are taking very good strides to improve the infrastructure. I know you talked about that yesterday, but it's very important that it's not just about what the private sector can do. The private sector can do a lot, but the government, with judicious investment, either as government or as PPPs, in the infrastructure for digital payments, digital transactions, digital business, can play a huge part. And some of the main things that can be done are helping make sure there's a core interoperable payment system under everything, such as the Unified Payments Interface from India that I have a picture of there, that you have national, maybe even in ASEAN, or dare I dream APEC perhaps someday, there are unified QR codes, so you don't have to use a different payment system for every purchase, both those ingredients, that you have biometric ID, digital ID for individuals, and you allow digital KYC. It's not just about having the ID, it's about being able to do things digitally and not have to depend on wet signatures and paper documents. And you have digital business registries, digital asset registries, particularly for movable assets. And the harder stuff, which fewer governments are able to make progress on, which is getting good data governance protocols so that all this digital data can be available in a way that starts with the owner of the data, who is the business or the individual, and with their consent, their data can flow to the right places so the right information gets to people instantly and accurately, while protecting their privacy, while keeping this under the control of the holder of that data. And of course, the hardest one of all is, how can we do things cross-border? We need to be able to do that, because especially for SMEs, the SMEs that grow faster are likely to create more jobs. They're SMEs that trade across borders. But when they trade across borders, for the most part, when they go to a new border, they have to start from zero and reestablish their bona fides and their identity, their transaction records, and therefore their ability to repay. And that's just too expensive. We need to be able to do these things across border. And there are some exciting things happening. The Monetary Authority of Singapore is bridging a number of corridors to try to experiment with arrangements here, including, I just heard yesterday, with the Philippines, which is great. They actually started with Africa, but now they're reaching out to some of their ASEAN neighbors. And I was pleased to hear that the Philippines is in that pilot scheme. And because we were in Cambodia, I had to shout out to the National Bank of Cambodia, which with their Bakong product, which is just launched, it's a really interesting bit of common infrastructure. It is, if you will, a mobile banking, mobile wallet, unified payments application that you can get in one place. It works with most of the banks, almost every bank in the system, including, and many of the non-banks. And it comes with their national QR code. and you can basically well, right now in Cambodia, you still have to worry about what sign is up in the shop and which QR code do I need and which app do I need on my phone, and you may need several, but pretty soon you're just going to need the one, and it's going to work, and you're going to be able to have any bank you want or any non-bank that you want, and they'll connect to it. And that's a very exciting new development that we were just hearing about a couple days ago. So I don't want to leave out governments here. You should be pushing them in the private sector to do their part, because they can make things much easier. And also, if they're a little reluctant on the related laws and regulations, particularly about recognizing digital signature, digital KYC, digital transactions, digital contracts, they can slow the process down. So it needs both the technology and the underlying laws and support. I want to say one more thing about this, because I should have said earlier something that we should be talking about too, which is there are major gender issues in enterprise finance. We've known for some time that women entrepreneurs have a harder time than even general SME entrepreneurs. And we also know that they've been disproportionately affected negatively by COVID. But it's really hard to work on addressing women's finance issues because our data in most countries, in most banks, is not gender disaggregated. And so we are pushing through the G20 to do something about this. And we found that there's a very promising initiative that started in all places in the United Kingdom, which I would not cite as an example of a modern and competitive banking system. It's dominated by 4 banks. There's a lot of non-bank innovation now, but it's been a pretty traditional, hidebound, typical North American, Western European, Japan type banking system that's behind many of you in Southeast Asia, East Asia. But one thing that they did a few years ago was they came out with a report that showed them how little they understood about gender issues in enterprise lending. And as a result, they created a public-private consortium, which now has virtually every commercial bank and many of the non-bank financial institutions, lenders, equity providers, leasing companies, and more, who are voluntarily reporting on gender disaggregated data. And as you can see, there are now over 100 financial institutions in that country who've signed on to the Wi-Fi code, and they are producing annual reports. And so we, through the G20, through the Wi-Fi Secretariat at the World Bank, are pushing to have other countries take this model. It's not something that you need to do in a cookie cutter exact duplication approach. It's a public-private partnership in the UK. It could be private-led in some countries. It could be publicly pushed more. There are lots of different ways to do this, but the idea that there's joint commitment and you pool data and you create a common report that tells both the industry and the policymakers what's going on in a gender disaggregated way is very, very important. It's a step that has been a long time coming, and I hope we are finally making progress on. There are about 5 countries that are doing pilots based on the UK example, and I just heard again 12 hours ago from the Indonesia G20 meeting that Indonesia being the president of the G20 now, I just heard that Indonesia, having gone to the workshop we organized in July on this example, they've got together and they're planning how they're going to do it in Indonesia. So that's very exciting. Should you do it in the Philippines? Why haven't you done it already? So on that note, I may have gone over my time a bit, but I hope it's been interesting and fresh. And I look forward to our discussion when we can take on more of this. Thank you. And I will stop sharing my screen.
Thank you very much, Matthew, for that. And now let's go on to the next speaker. Christina Maines is the Regional Director, Southeast Asia for Women's World Banking and has over 20 years of experience in Asian financial markets in project finance, strategic corporate projects, and credit risk. As head of Southeast Asia, Christina Maines leads Women's World Banking Southeast Asia business in its 3 main markets, Indonesia, Cambodia, and Vietnam. The Southeast Asian team serves financial services institutions, ministries, and regulators, and key stakeholders with its advisory solutions, policy advocate, and research work. Christina graduated from the Cornell University and the University of Michigan at Ann Arbor, Michigan. She's based in Singapore and previously worked and lived in Jakarta. Can I now call on Christina Maines?
Thank you so much, and good morning, everybody. Let me just share my screen here and say that I was thinking about it, and this is a Thursday morning, and when I was back in university, I had this professor, and he would always start the course on Thursday mornings holding up a copy of the Wall Street Journal and holding up an article and saying, reading the headline and saying the Internal Revenue Services, 10% of Americans only pay 10% of taxes. And so I wanted to put in perspective today what we're talking about in terms of women's financial inclusion. And so, in the world right now, there are just about 8 billion people. And so I've checked, I understand that you guys can type into the Q&A. And I would like to see if I can get some people up here and tell me how many women globally do you think are unbanked or underbanked, so underserved? So perhaps there are branches within 100 miles of their home. Can I ask to see if people want to take a guess in the Q&A panel to see, what you think the number of women are who are unbanked or underbanked? Do we have any takers on the question? 5 million? Thank you. Any other takers? 3 million? 60%? 4 billion. My goodness, these are very glum numbers if it's true for certain. Okay, well, let me go ahead and share my screen here. All right. So at Women's World Banking, let me see, sorry, I know you can't see it yet. $36 million. Let's see. I'm so sorry. Aljan, can you, if I give you the file, can you share it?
Yes, ma'am. Please send us the file.
Yeah, just a moment. I'm so terribly sorry for the delay. Okay, I've just sent you the file on email. While Aljan is loading up the file, in terms of where the world is today, there are 1 billion unbanked or underserved women in the world. And so that's really a remarkable number. The other thing that's really interesting, and we're going to be talking a little bit about it this morning, is that of the 1.75 billion women that have a bank account, only 80% are actually using it. So 20% of women out there in the world that have a bank account are not even using it actively. So let me just check. Aljon, have you received the file yet? So I'm going to go on with my presentation and talk about slides, and apologies when they do get up, it will be great. So, just wanted to introduce in terms of, Gay Santos asked me this morning to talk about women and financial inclusion. And so, what I wanted to talk about this morning was, who is Women's World Banking, what we do, and our role in driving women's financial inclusion and transforming lives. The second one I'd like to talk about are what are the barriers to women's financial inclusion. I think Matt touched on it, that the barriers to women in SMEs is a lot higher than other types of businesses. And so, it's important to think about what barriers women face that might not be faced by everybody else in society. And then finally, talking about what do we mean about using a gender lens approach to designing women's products and services in financial services. You can either call it gender lens or you call it women-centered design, but both things are very important. Aljon, I'm just wondering, do you have the slides yet? Can you access them? So just moving on here. So I'm going to skip right into some of what are the barriers to financial inclusion. So if you think about it, it's essentially in three parts. One is for the women. Oftentimes, one of the key things that we see, thank you very much, Matt. If you can skip to slide 7, I think is about good. Yeah, perfect. Thank you so much. So in terms of the barriers to women's financial inclusion, one of the things that we find is that, women just have low awareness of, what they can do with, a bank account. So oftentimes, they see the bank as only one thing, or they see the e-wallet is only providing them a remittance from their daughter who's working in the city, or they see it as a way of their wages get delivered, but they're not aware of all the different things they can do with their bank account. In fact, half the time they're not aware that they have a bank account. Some of the other things that we see in Asia for women, and this is particularly during COVID, is the low phone or SIM ownership. So oftentimes we work a lot in Indonesia, and I don't know how it is in the Philippines, but the man gets the phone during the day. He leaves the house, he does his business. Then during COVID, the children were learning from home, so the children have to have the phone. There tends to be one per family. The children learn from the phone. And so oftentimes what you find is the woman gets the phone at the nighttime. And so she has the least interaction with the phone. So, that's a barrier for women. And then finally, there are social and cultural norms that prevent women from, being financially included. So I have my colleagues in India, and they do some really interesting studies. And they find that when women are in a wet market area and they're running their own business, their trading stall, that even if there's a micro branch in that wet market, that belongs to a bank, that they don't feel comfortable going into the branch. That's the man's place, and so they'd actually rather have an agent from the bank come to them personally in their stall. So there are a lot of social and cultural norms. The second thing for you bankers here today is, just the lack of financial solutions. And I think a really good story about this, I was talking to a woman who worked with Bank Rakyat in Indonesia, and she was way out in the Indonesian archipelago. And the products, these microloan products that they were offering, were prefaced on the notion that a small business was a business with capital. So there were fishermen and they had boats, and so it was easy for them to get a microloan. But when you look at women in terms of how they make their livelihood, more and more they make their livelihood on businesses that need working capital. So oftentimes women will have produce food, they will produce handicrafts, they will do a lot of work at home. So it's it's different, and so a bank has to look at it differently in terms of how to serve women. And then also finally, as Matt ably pointed out, there are some real infrastructure challenges. KYC, I think I used to work in the Philippines for a fintech in the Philippines, and one of the key things was that just to send a little bit of money, from a customer to the business, required really, going quite up high in the KYC. And so sort of, the regulators have to think about, is there really a threat of terrorism, or is there a threat of, theft from very small transactions? And what do we need to do to change that? Or, in terms of connectivity, I live in Singapore, and the government, essentially, when you're going out and about, if you can't afford to have a banking connection, there are many places where you can get onto the government infrastructure and get free internet. It's not fabulous, but it will get you by, and that's really important. So next slide, please. So, this is all to say that really for women, women have a steeper adoption curve with financial products. And this is why, it's really sort of important to think about, what do we have to do to help women use financial products? Oftentimes, I'm sure many of you know that, it's a horrible thing to say, but perhaps your wives and sisters might ask more questions than you would about something. Women tend to have a thing where they want to feel comfortable with the product. They want to kick the tires more. I'm telling you, this is not, this is something that I've heard very directly from a very senior person at one of the largest global wallets that offers microloans. That, one of the things that's interesting is they find that the men, when they're in a store, they want to buy something and get a microloan. And these are not wealthy men, I want to point out. These are sort of the low income customer segment. They're more likely to get the loan directly in the store. They see it, they make the decision, they're done. And interestingly enough, when they look at the women actually wait, go home, consider, mull, and then they get the loan. So there's a real difference in the data that some of the wallets see. The other thing is, women like to, interact with agents. They often want to check to make sure they're doing things right. So they require an in-person touch point. But once onboarded, as the slide says, they really are loyal customers. Next slide. So, as I said, I think the questions that women want answered, may be a bit different. They really want to explore a product, and they want to know what value it brings to them. And so, in order for you to get women on board as customers and to become financially included, whatever you do when you're, creating your customer journey with your clients, these are some of the questions that you have to answer. Next slide. And finally, I think this is something that's really interesting in today's world. Digital financial capability, what we've seen during COVID, before COVID, I remember that many of the institutions that we worked with, they were all bricks and mortar. They were getting their core banking systems. They were sort of starting on payments. But frankly speaking, it was COVID that accelerated this. But this is actually, it's a great boon and an opportunity. But what's also worrying is that for women, you will actually find that women feel less certain. Their digital financial capability is not as good. And so digital financial services is really an amazing opportunity. But on the other hand, one of the things that at Women's World Banking we really concentrate on a lot is making sure that women build those skills and that they feel comfortable and confident. So I'm going to pause here, and I'm going to tell you we had a situation in Cambodia. We were working with a client, and I'll show some data later. But I'm just wondering, if you think in your mind, when you walk in the streets of Manila, when you walk around your town, what percentage of women that are in the low-income segment, feel that they don't know how to use a mobile banking app? I'm wondering if you kind of think to yourself, is that number 10%, 20%, 80%? So, what we've actually found, next slide, please, is that 46% of the largest mobile wallet in Cambodia, 6% of the women, when surveyed, felt or responded that they didn't feel comfortable using an app. So therefore, one of the things that we do at Women's World Banking is that we use a women-centered design approach, and we focus on designing for the customer. So answering the questions of women, giving them digital financial capability training. And at the same time, we make sure that it's commercially viable, because we do really understand that, if the bank isn't making a profit out of this, or if the wallet isn't making a profit out of this, there's no way that you'll continue. So financial inclusion is not a charitable thing. Financial inclusion is a business decision. And all of the solutions that we do, are driving towards not only account activation, but increasing the usage, cross-sell of products, increasing the usage of profitable products, whether it's a micro loan or whether it's remittance or whether it's payments. We work together with the banks and the wallets that we work with. So next slide, please. So my third point today is just talking a bit about, as I mentioned, this work that we did with Wing. And I wanted to give you some specifics about actually what Women's World Banking does. So, we're a nonprofit. We work internationally. In Asia, we do most of our work right now in Indonesia, but we do some in Cambodia, and we're also doing some work in Vietnam, and we'll be in the Philippines soon. But what is this gender lens approach? So this is a project that we did with Wing. It's the largest e-wallet in Cambodia. And right now, Wing has about 200,000 women factory workers and tourism workers that get their wages through a digital payroll account. That's 200,000. That's an awful lot. In the context of Cambodia, there are probably about 2 million women that get fixed salaries. And so this is a good portion of the women in Cambodia. So our impact in the scale of what we were doing was really important to Wing. Next slide, please. So here's the problem that we had. So legally in Cambodia, the government says that factory workers, salaried workers have to get paid twice a month. And so Wing had all of these customers, mainly factory workers. And, Wing also had a wallet, but what they found was that the women were all cashing out. I think if you click more of the slide, it will show what was actually happening. Next, click the slide, please. Perfect. So instead of using the wallet, 80% or more actually of the workers were cashing out their salaries at the ATM or using a Wing agent. So, I was in Cambodia at the beginning of August, and we drove by, and there were 45 women lined up, smashed up next to each other, waiting for the ATM. And it was obviously going to take at least an hour for the woman at the back of the line to get access to her money. And factory workers are really time poor in Cambodia. The other thing is they were finding that women would go and cash out their salaries at the agent. And while that's good for the agents, they make money out of it. Actually, many of the women didn't even know they had their own account, and they just got the money over the counter. So Wing came to us and said, we want women to use more of our products. Right now, we're doing good for the Cambodian people, but we want women to, be able to control their destiny. We want them to be able to be financially empowered. We want them to be able to remit money home, which is actually a common use case for women factory workers. I mean, the number one thing they do is they have to send money home to the provinces. So next slide, please. So the idea behind our project was, what could we do to make sure that Wing achieved its goals and that women started doing different types of transactions on the mobile wallet. So next slide, please. So, one of the problems when we started to do the research on the ground with Wing was that we found that Wing just didn't know what she could do with the Wing app. She had no idea what it allowed her to do. So, many of the women would go in, they'd cash out their salary, and then the second transaction with the agent would either be to send money home or to pay their rent or to pay their utilities. And so our idea was to work for ways so that the women would become familiar and think of Wing as something more than just the place where they cashed out their salary, but that they could do other things with Wing. And so that was one key premise. And then the second thing was, again, that digital financial capability was to make sure that women felt more comfortable in using the Wing app. So next slide, please. As mentioned, and forgive the crudeness of the slide, but 56% of the women said they didn't know how to use the app. Another thing that you find with women in digital financial capability is 46% are afraid they're going to make mistakes. And I think about my brother, he just kind of uses his phone, and if it doesn't work, he just kind of moves on. And that's something you really find, that women are hesitant, and with good reason. Female factory workers in Cambodia, they don't have excess money to spare. And so, the thought of sending money the wrong way or it not reaching there on time to make a school payment or to help their parents, pay for their microloan, these are huge issues. So we had to get over that barrier of making sure that women felt they knew how to use the app and they felt comfortable and they weren't fearing it. Next slide, please. The other thing that was a positive from our research was that we found that overwhelmingly, the reason that people went to Wing agents was because it was close to home. So, often in Cambodia, women factory workers, they live near the factory. And so they would go to the agent that was either across the street from the factory or across the street from their dormitory or where they lived. So that was actually really good, because that said, if we sell the Wing mobile app as something you can do from your home, it would be a much easier hurdle to get over, so make it at home, and, women are going to give up using the agent. Next slide, please. But I think, as Matt pointed out, there are still very serious infrastructure problems. And so I thought this slide was really interesting. So, the positive side is a third of the women that we surveyed, once they're using the app, they don't experience issues. But the important thing here is, if you look, 47%, so that's almost 50% of the women either had their service interrupted or their service was unavailable. So this means really, either the Wi-Fi wasn't working or the internet was unstable or there was no electricity. But that is a real hurdle that, is not going to be solved by Wing and does have to be solved, by both the private and the public sector. So it's a real barrier to financial inclusion. Next slide. So, just moving on, this is what we did in terms of, the guiding design principles. So part of our, half of what we were doing was to get the women to activate their accounts and start using the mobile app. And the other part was to engage them to increase their usage ongoing basis. So, but one of the things that we did was we used factory team leaders to sort of train the women. So they were instructed on how to get the women together and to show them how to use the app. The other thing that Wing offered was a do one, see one, do one. So the team leader had a special credit, so she could do a transaction for a woman at the break in the factory. And then the woman would do a transaction herself. And that way she would become comfortable with using the app. So, we were building comfort and confidence among the women that were using the Wing mobile app. So next slide, please. So, here are some of the examples that we did. Wing has this great green branding. I think it's an amazing color. And so, we would give the team leaders these special Wing shirts so that, women knew that they were trained. And so they could go to the team leader and sort of say, I'm having trouble using the app. Can you show me one more time? Or I forgot, or I can't get in with my PIN. The other thing, as I mentioned, is that women really want to feel secure before they do a transaction. So we provided tutorials. In Cambodia, we provided it on paper, but we've just done something with Dana in Indonesia where we, provide YouTube videos that you can push through on the mobile app. And then finally, reminders. We, use posters in Wing factories. We also use SMSing as ways of, really sort of pinging the women and saying, you're getting your salary tomorrow. Do you want to use the Wing app to send the money home instead of using the agent? So getting that language right and that messaging at the right time of the payment cycle is very important. So next slide, please. So this is a step-by-step look of the women-centered design approach, and it's really not just about a product, getting the payroll account going, but it's the whole journey for the woman so that she becomes comfortable with Wing. She sees Wing adding value to her life, and we use different types of messaging depending on what country we're in to make the women remember to use it and asking refreshers and prompts. So it's a total package. It's not a one-off thing. So next slide, please. So, I think you'll probably want to know, this is all very nice. It sounds good, but what is the true impact? And so, I just wanted to share with you, I know that these probably seem like small adjustments. And actually the cost of training the trainers in the factories, while not insignificant, what really impressed the CEO and the senior management of Wing was that it did actually improve the activation and the cross-sell rates of these women that these clients, these customer accounts were not particularly profitable until they implemented the solution. And so it resulted in an 8 times increase of the profitability of the client as projected out 3 years. Also, I'm really delighted to tell you, I should have put it in the slides that, starting in September, they're rolling out. And so this solution that you've seen here today, by the end of the year, they will have reached over 90,000 women factory workers with digital accounts. So, in terms of impact and scale, it's really quite amazing. So next slide, please. So finally, I just wanted to share with you, if there's one picture I wanted to, take home about all of this, because, this is a lot of words and a lot of theory. I found this slide last week and I was sorting some pictures, and this is my brother teaching me how to ride when I was 5. And what I want you to sort of take home is that, as members of the financial services community, we don't need you to do things for us. But women, they just need a little push on the journey. They need somebody to help them, show them do it. I remember my brother showing me how to ride first, and he said, okay, now you do it. And with support and with greater confidence, we are on the way at the journey to financial inclusion. So I hope that my talk today has given you a bit of inspiration to think differently about women clients, thinking about what the barriers they face, but also knowing that you can really transform their lives. And it's something that we at Women's World Banking work on a lot. So next slide, please. So here you go. This is our team in Jakarta in August. And thank you all for your attention this morning, and my apologies for the slide snafu at the beginning.
Tony Boy, back to you.
Hi, sorry about that. Okay, now before I go back, let me introduce to you our moderator for the panel. Okay, I'd like to introduce Griselda. We call her Griselda. We call her actually Gay. Griselda Gay Santos, and she is the Regional Director for Southeast Asia for Water.org and also a member of the FINEX Week Committee. Gay will be joined by Mr. Simon Ong. Simon is the President and CEO of OmniPay and a fellow FINEX member. And she will also be joined by Mr. Kamrul Hassan Tarafder. And Kamrul is the President and CEO of ASA Philippines. Okay, Gray, can I turn this over to you? Gray, can I turn this over to you?
Yes. Hi.
Okay.
Good morning, everyone. It's always an honor and pleasure to be joined by our colleagues here, actually friends of FINEX. I think you may not realize that these are the influencers, global influencers and regional influencers in the space of financial inclusion. I think I want Simon to join as well. We have Kamrul here. Dr. Kamrul, good morning to you. Good morning, Matt. Good morning, Chris. I don't know, did we lose Simon somewhere?
Yeah, I'm here, but I just can't get my video to work all of a sudden.
Oh, okay. That's fine, Simon. No worries. So I think I will start with Simon and Kamrul. Basic question. Maybe not everyone in the audience knows about OmniPay. Of course, OmniPay is famous in its industry and space. Simon, can you provide a little background about OmniPay, and then I'll turn it over to Kamrul to talk about ASA Philippines. Over to you, Simon.
Thank you, Gay. And sorry about the video. I'm not sure what happened. It was working earlier. In the Philippines, we have offices in Indonesia, Malaysia, Singapore, Hong Kong, and soon in Canada and the US. Financial inclusion was really part of our corporate DNA before the phrase was even coined. I remember when the late Deputy Governor Nesting Espinilla, we were applying for our license, and I told him a simple story when he asked me what I was wanting to do. I said, Gov, I'm not served by the 20 credit card companies. I'm not even after the top 25% served by the 600 Philippine banks. I'm not that greedy. I just want to serve the bottom 75%. He laughed and gave us the license, and kind of the rest is history from there. So really, as OmniPay, our mission is we leverage technology to bank the unbanked in a sustainable manner. Basically, we wanted to accelerate nation building through inclusive growth. Build, own, and operate our own IT infrastructure. So from the physical data centers to the core engine to the card system, remittance platform, all of that was built in-house. And that may not seem like a big deal for most people, and even perhaps Jurassic in this world of outsourcing. But what it allowed us to do was to peg our costs as a utility. And so when we give away transactions by not charging a transaction fee, we may not make money, but we don't lose money. And I think that's a key differentiator compared to other players who may not own and operate their own infrastructure. The other advantage it gives us is that we can customize our payment program, as the BSP put it yesterday, hyper-personalized. In our case, it's hyper-business, in the sense that we work with business on a business-to-business basis. And so we customize the card program or the mobile app program specifically for that particular business. So they can dictate the business rules in terms of how they want to do the KYC, whether they want eKYC or physical KYC, whether they want to open up agent networks or not, they want ATM access or not, they want international acceptance or not. All of that is driven by them in terms of the business rules and everything. And so really at our core, I think one of the best lessons we learned was to, as Christina actually mentioned earlier, we look at our strategy as creating shared value, meaning we make money by doing social good. Thank you, Gay.
Yes, thank you, Simon. Very, very moving in terms of the focus on the base of the pyramid as an approach. So, Dr. Kamrul, MFIs, as you know, has been very instrumental in really opening up the doors for the unbanked. Can you elaborate on ASA in terms of your business model, at the same time, a little bit historical context of how ASA came about?
Yeah, good morning. Good morning, Gay. Thank you very much for taking me in your session. And thanks to FINEX for inviting me. I'm a little bit ashamed that my knowledge is actually poor in terms of FINEX. It's a 54 years, you're celebrating 54th annual meeting, but this is the first time I know it. But anyway, ASA Philippines is a not-for-profit foundations which was organized, incorporated 2004, August 2004. So we're basically 18 years in operations. I started this with the help of Ambassador D and late President Korea Aquino when she was alive, with 3 staff. Today we have over 11,000 full-time staff, and we're serving, on the first month we served only 2 clients, and today we're serving over 2 million active borrowers across the country. We have branches in Itbayat of Batanes and the Sitangkay of Tawi-Tawi. How remote ASA's operations is. When we are serving 100% women, all women, we don't give a single loan to the men. These are all women. So 2.1 million active borrowers. These are all women-led enterprises across the country. At this time, we have around 35 billion pesos of loan portfolio, and roughly about 45% of this portfolio is actually coming from the clients themselves. So it's not only the giving a loan, but also teaching the ladies or helping the ladies in the financial inclusion, as well as for their future capital buildup or the savings. As you know, that in the Philippines, NGOs today are regulated by a special law and the council, which is MNRC, Microfinance NGO Regulatory Council, and in there, as well as MCPI support, there are around 6 million clients. So ASA, if you could see the market size, ASA probably is actually serving, or ASA share is actually 1/3 of the market. And in terms of portfolio, it's probably is half of the market share. And as you know, that we have just came out of the impact or severe impact of pandemic. In 2020, we incurred severe loss. It's because of the lockdown and the collection interruptions, but we were able to give our drive and we were able to recover it. And we give credit to our clients because we call them our bosses. Every single peso of our expenses is coming from their pockets. Therefore, we recognize them as our true bosses. So in 2020, we spent around 857 million pesos only for CSR expenses. So if you look at the ASA's expenditure structure, around 7 to 9% of our 5 to 7% of our gross income is actually we always earmark for the CSR expenses, social responsibility, or client community services. And as far as net income is concerned, I think it is around 15 to 17% of our net income actually goes for the client community services or CSR expenses. Then all the natural calamities as well as man-made calamities with bold hand. In any adverse situation, our Philippines never crippled to give a loan to the clients. Even during the time of the pandemic, we continue to disburse. And in the event of any adverse, we actually do even more. We in a natural calamity, we first go there with the client to the client for a psychosocial intervention, how they are to understand their situation, and then we provide a small amount of relief, and then we give a grant, a cash grants, so that they could immediately do something at the event of the calamity, and then we provide interest-free finances. Then we focus on the business that we have provided, either it is on the moratorium or we give a time for them to pay it back at a later time. And for our client to recover from the pandemic, this year we are actually disbursing 5 billion peso malasakit loan, which is without any interest. 5 billion peso without any interest. And we borrow from the commercial institutions and we give it to our clients without interest. Yesterday I was supposed to attend to your session, but I was with Citibank yesterday. We signed a loan agreement, $20 million from Citibank. And as you know, we received from ADB $30 million. And this year, 5 billion, which is 5 billion means $100 million, we'll be spending to the client without any interest. So that's how ASA Philippines is. It's not only giving the finances, but also by being with them. I think I mentioned it in other sessions that as a financial service provider, we're not financial institutions because we don't have a license, but we still provide financial services to the client. So KYC is important, but to us, we don't stick ourselves, limit ourselves only to the KYC. We go beyond. We call it BWYC, be with your client, not only in the good time, but also in the difficult time.
Amazing.
So in short, how ASA Philippines it is today.
Yes, amazing, Kamrul. I think that's what we need in terms of the support that can lead us to the transformational change that we need, not just across the world. So very, very impressive, Kamrul. So I want to go deeper in terms of asking, very informative presentation, Matt and Chris. Maybe I'll start with Simon. With the challenges we have right now, what is the specific biggest challenge in your space, being the financial technology space, and how are you doing things differently now to still support your vision for financial inclusion? Simon, over to you.
I think, Gay, for us, the biggest challenge we ran into was the literacy. And initially we thought we were kind of prepared for financial illiteracy, but we ran into the challenge of basic illiteracy. For example, when we launched the conditional cash transfer program with the Philippine government, with the Department of Social Welfare and Land Bank several years ago, we knew we had to teach the people and show them how to use these new cards. We had issued them prepaid cards to get their ayuda or their benefits. So we had mobile ATM set up, we had agent desk set up so they can actually walk through the experience, very much like what Christina had mentioned in her presentation earlier. But what we ran into and what actually scared me was when we saw the queue for the mobile ATM and they were opening the PIN mailers and they were asking the people around them how to read the PIN. So something that basic, that was something we really were not prepared for. And as we move towards mobile, especially because of the lockdowns associated with COVID, that became even more exacerbated. If you can't read, then how do you use a mobile app? Let's not even talk about whether you have a phone or whether you have data access, right? So that became the real challenge for us. So there's really no short-term fix around it. I mean, in terms of literacy, what we see are more, I guess, coping mechanisms where perhaps the farmer will rely on their children to read the app for them instead of being able to transact themselves. So these are some of the things that we're running into as challenges in terms of being able to serve the bottom of the pyramid.
Yes.
Yeah,
Thank
you know,
you.
there's
Yeah,
a
go ahead.
misconception with all this talk about digitalization. There's a real misconception that what digitalization is about is replacing people with machines and robots and things like that. If you look at the institutions that are doing the best job in digitalization, they are not replacing their people. They are reorganizing how they use their people. And one of the silliest things that bankers in particular have done is they've taken a group of people that they employ who have to pass through pretty high hurdles. They have to have pretty good qualifications. They have to be very numerate. They have to have advanced degrees in many cases. And what do? They put them behind bulletproof glass and have them doing routine moronic tasks like counting money and stamping things. And this is, digitalization is about liberating those people and putting them to work doing things that they're much more useful to their customers doing. For example, you have a new bank in the Philippines, Time Global, but they're not new in South Africa. And they got to 5 million clients in like under 3 years from nothing. But they bank with what looks like an ATM machine, but they have a person right there. Why? It's all because of what Simon and Christina and Kamrul are talking about. You need to be with the client. You need to have a knowledgeable banker helping advise them, not only how to use the technology, but how to understand their own situation and have a wise person who they can take counsel from. But if you can't do that because all your people are sitting behind bulletproof glass, well, of course you're going to say it's too expensive to serve the poor, right? So it's very important to realize this point. We actually had a debate on this at our global meeting 2 weeks ago, and interestingly enough, the managing director of DBS Bank, which I think many of you know, it's based in Singapore, but it's active across the Philippines and virtually all of Asia. And they're digital only in most countries, but they're not no people. And the managing director of DBS wanted to take the people side in the robots versus people debate, which tells you something about, if DBS, which wins the award for best bank for SMEs in Euromoney every year, they win our award every year. If they're telling you that this is how you have to do it, you should be listening. But unfortunately, too many people are seeing digitalization as a quick way of doing it without people, and it's not going to work in that approach.
Yes, very, very, very valuable insight, Matt, and I definitely agree with you. Christina, you've talked about very useful, the behavioral change based on your experience with Wings in Cambodia. I'd like to know, you talk about more of how the mindset is changed from the beneficiary or from the client perspective, but from the business perspective, this is also a question to Matt, based on your the number of companies you have from your network. How do you manage that readiness to have that focus on inclusion? I guess to Simon's point, even the readiness to adopt technology, which are two necessary elements to lead us to that transformational change. Chris, over to you. You're on mute, Chris.
Obviously, this is not my day of technology. Apologies. So I would say it's two things. I think the first thing we always look at for the financial services partners we work with is there has to be at least an interest in serving the low income segment, and also an interest in serving women. And so that's first and foremost. But there are probably two answers. So the first thing we do is we do ideation sessions, and we get a bunch of people in the room, and we talk to them about, we bring in the agents from the field, and we ask them, and we get in groups, and we have the groups interview them and say, when you're working with a woman client, what is the problem? As Simon said, can she remember her PIN number? How far can she get into the transaction on the mobile app before she doesn't know what to do? And so we essentially do an ideation session to talk about the customer journey. What, as a woman starts to use her bank account, what barriers does she encounter, but also what kinds of things does she want to do when she interacts with the bank? So I think it's just putting yourself in the steps of your customer. And I always find it really interesting because people don't have a problem doing this at the high income level. In Singapore, we have a ladies credit card, and one of the bank accounts for women now gives women some health insurance. So obviously, using gender data and looking at gender data patterns of what a woman is using her bank account as, that works at the high end level. But now you just have to descale it down to the lower levels and say to yourself, what do the women want to do? So it's use case, and it's also trying to change the journey. And that's how we make the business become ready to serve women customers.
Yes, interesting point. Because yesterday we also heard that from Union Bank in having that a personalized journey for the client. Kamrul, I have a question from the audience. ASA has put a special emphasis on providing financial access to women and has been quite successful. Not quite, for me, it's successful. Most of our members are not in NGOs. And we're talking about FINEX. What's the best pitch for financial executives on why lending to women makes sense and is profitable? I think this is a question for Kamrul, and Chris, maybe you can also share your, of course, Matt. So Kamrul, then Matt. Kamrul, over to you.
Yeah, may I know the question, why women's lending to the women are successful? Why not?
So
to the
it's
men?
most
Was
of
that the question?
how do you encourage our FINEX members here to appreciate
Okay.
that lending to women makes business sense?
Yeah. Thank you. I think it's a common question actually asked in many forums. I'm used to this because why we are focusing only to the women. It is primarily a philosophy and a global study that if you give finances to the lady, you are 95% sure that the money will be maximized for the benefit of the children and the rest of the family member. And if you give to the man, you are not even 75% sure. So why, by knowing these statistics, why shall we be taking a risk of 20-25% of our resources? That's the first thing. And it makes business sense for every financial institutions because women are actually available around the homestead, and all the businesses we finance, it is actually home-based businesses. So you would be needing a person who is around the home, and you provide finances, and definitely will be successful. So which is actually the ladies. And ladies are more humble. And in the Philippines, the reason why primarily that we are servicing to the ladies, they're also the marginalized sector in the Philippines. There was a statistical research study has been published by Philippines Statistical Authority in 2017. All the children were born, 54%, nearly 53 point something, or were born out of wedlock. So it created a debate, or it came from the debate that whether these illegitimate children are actually taking their share of the legitimate children. why and why not. But no one has ever spoken about what happened to the mother, what happened to those single mom. They are forever discriminated because the Philippine society is not the advanced economic society where the social security system is protecting both mother and the children. While in the Philippines, they have to on their own. And because of their mother, they have to carry this child and they have to carry this for the rest of their life. So that's the reason we are actually focusing, ASA Philippines is focusing to the mothers and mother-based business run by the mothers. And I'm sure over 99% collections are actually there, right? So if the collection rate is that high, why a financial institution will not be inspired to give finances to those sectors?
I think the reason is, and I'm sorry, let me speak on behalf of those sitting on the 45th floor of the Makati Towers who are running the large banks in the Philippines. They listen to that and they say, that's all well and good, but those small ticket clients, the way my bank works, even if they pay me back, I lose money. So I can't do it. But there are other reasons, right? If we look like for like, if we compare women entrepreneurs with men entrepreneurs in the same business at the same level, we find that not only do those women entrepreneurs pay back better, as Cameron said, they also tend to use more products from the bank. So there's more cross-sell, there's more value per customer. They also tend to be more loyal to their bank. So if another bank tries a teaser offer, they are less likely to switch. And finally, they refer more business from their employees, from their family, from their friends. So there are very sound business reasons that the bankers on the 45th floor in Makati should be thinking about the women's market. And let me give you some broader evidence for the financial inclusion for the small business market in general. Many of you know an organization, most of us call it ACLEDA. I found out 2 weeks ago that for 30 years I've been calling it the wrong name. It's actually AC-LEDA, but anyway, it's a Cambodian bank now. It happens to be the largest bank in Cambodia, but 30 years ago it started as a development project, much like ASA. Today, it is the largest bank in Cambodia. It has assets of over 8.6 billion US dollars. That in a country of 16 million people is like having assets of 50 billion plus which is not a small bank in the Philippines, right? That's a pretty substantial achievement. And there, on the other hand, if you look at their asset composition, 80% of their assets are small business and farmers. And yet they're not only the largest bank, they're the most profitable bank in the country. So if that example doesn't tell you in an emerging market country that there's a strong business case for going to the base of the pyramid, I don't know what can. And it's about why can it be done by an AC-LEDA, an ACLEDA? It can be done because when all we had was people technology to do finance at that level, they ran the most efficient, productive. If you looked at all the CGAP statistics in the 90s, when everything was all manual and people-based, they were the most efficient and productive. But then they also moved to every technology area that's being explored in rich countries. AC-LEDA is exploring too. And they're deploying them and redeploying their people. They're not firing people, they're just redeploying. And they stay competitive and they stay prosperous. And this is what we should be looking at in emerging markets, not, with all due respect, because I hope they're not in the room, Citi, JP Morgan, Barclays and others, because that's a market that grew up where 5% of your clients pay for the other 95%. If we do that in emerging market countries, we're just going to create the inequitable system we have in the West. And you don't want that. That's not what finance was meant to do. It's not what many of us in the development business joined to work on finance for, but it is an easy thing to slip into in a Western society where you have all these high-end things and big corporations and high net worth people. It is not the way to build a financial sector for the Philippines. And I hope that you will take these other examples to heart, because there's a lot of market out there, despite all the great work that we are hearing about with OmniPay. with ASA and others, you still have huge exclusion in the Philippines.
Yes,
And unless we get the mainstream financial sector working on this market, we're gonna be 20 years from now talking about, yeah, we got 10 million covered, but we still have 90 million not covered or more, given the population growth rate of the Philippines. So, you know, I can't emphasize more how much this should be looked on as a business opportunity with the right business approach, and not just something that you should do good for your corporate social responsibility statement each year.
Yes, very much agree, Matt. Actually, I can speak for myself. I'm a loyal customer, a creature of habit. But beyond that, I mean, at water.org itself, Dr. Kamrul knows this. I mean, even in the pandemic, majority of our borrowers, I mean, the borrowers of the microfinancial institutions that we work with, majority are women. And what we learned from the pandemic is that despite the challenges, the NPLs on water and sanitation and wash loans are very low. So that simply proves your statement, Matt. I mean, there is a business case for this, a strong business case. And I think in a challenging environment right now, I mean, if you keep on lending to the big names, I mean, how can your portfolio grow, right? But anyway, Simon, I have a question for you. OmniPay is working with other countries. Are there policies in other countries that could be adopted in the Philippines to accelerate the rollout of the right technology to meet the challenges of SMEs?
Yeah, I think the two key technologies that actually, frankly, the BSP is already working on, one is a national ID. You know, the lack of a national ID that's widely deployed is a huge hindrance. You take a look at the Aadhaar in India, you know, the EKTP in Indonesia. Our national ID, our PhilSys ID, is nowhere close at this point in time. So that's something that we really need to get in place. Now, BSP has already put in the policies, you know, so that we can, from a financial institution standpoint, once you have the PhilSys ID, then we can accept it as full KYC. So that should help as that comes on stream. I think the other part is that the BSP is also pushing that will help accelerate financial inclusion is really the open finance or open banking. That one, as OmniPay, we actually sit on the technical group committee along with your former colleagues from IFC to try to craft the governance and the technology structure right now so that we can launch something fairly quickly where the data owners then can have more choice and go across financial institutions. Because I think a lot of our challenge, even if you do get into a financial institution, then your data is locked into that financial institution for now. And they may not have the right services or the right mix of portfolio, especially as you progress. And so that's something else that we're also looking at in terms of being able to do more. I think at the end of the day, you know, from an OmniPay perspective, we're really looking to see how do we define financial inclusion for ourselves. Every one of us here may have different operational definitions for financial inclusion. So in our case, what we're looking at, because I guess in terms of being Philippine-based, but and having our own infrastructure and yet being able to go internationally, what we're focusing our efforts now is with the migrant workers, because they tend to be abused. They, especially the ones that are deployed abroad, they don't have in the host country all the services and support systems that are available. And then they also have the agency risk. You know, they send money home, but maybe mom doesn't know how to use the technology, so it gets sent to sister, you know, or brother, but the sister or brother give the money to mom. Right? You know, so you have all those types of issues. So I think our next generation mobile app that we're hoping the central bank will approve soon will allow the OFWs to not send money home, but pay the bills themselves. Right? You want to make sure power bills paid, pay it yourself. You want to make sure the water bills paid, pay it yourself, or tuition, or mortgage payments, what have you, instead of having to rely on third-party agents, whether it's a sister or brother or friend or cousin, right? And so we're hoping to give the migrant workers more granularity of control over their own finances, because since they worked hard for it, they'll be the ones most responsible for their money as well. Rather than right now, I think we all are aware, almost 100% of the remittances being sent to the Philippines today are all consumed, right? How much of it is invested for a rainy day or for the future? Very little, right? So I think that's the ongoing challenge for us, is how do we, if we, as people get more and more access, and what's the next step? How do we define that financial inclusion? What do the currently excluded need? And frankly, that definition may keep changing as we make progress, right?
This is why having that interoperable unified payments interface, as India has, as Cambodia is pushing to have, is very, very important, just as important as digital ID. Because otherwise what happens is, yes, I have bank A and I have, say, utility company B. And if they don't use the same payment system, I'm stuck. So I need to get another bank account or change utilities. And it just gets very, very complicated for the small ticket player. If you're a huge company, you can have all the systems. But if you have a unified system, it doesn't matter which bank you have. It doesn't matter which government service you're paying for. It doesn't, you can go through the same thing. And from an open banking point of view, that transaction is, you could transmit the information about that transaction with customer consent to people that are trying to understand the financial position of that customer. And you can lower the cost of risk management, because at the end of the day, it's not about physical collateral. This is a myth that's how you decide risk in banking. It's about looking at the people's history of buying and selling, of paying on time, of things like that. But if you can't get at that because the system is so disarticulated, you're limited in what you can do. You can handle the big corporations because there's publicly published information, but everybody else is left out. Open banking, that's essentially what it means. We use the word too much without really understanding. We need to have this common transactional system where I can permit my data to be shared, and it can be easily shared. And even in Europe, where they're pioneering open banking, with the PSD2 legislation, the Payment Systems Directive 2 legislation. Unfortunately, it's not working very well because it's all good in legal paper, but the rails don't actually do it yet, because each country is putting a few little twists on it. That's, so it's going to take some work, and it's going to take pushing your government to really work on this, create the right underlying conditions, and then the private sector should be willing to cooperate and pitch in and help in the investment to build these rails, because everyone will benefit. If you get these things in place, everyone benefits. But unfortunately, if you try to push the private sector to do it individually, the one that invests loses. So you have to do it in a coordinated way. Otherwise, you have what mathematicians call a prisoner's dilemma. And there's no incentive for anyone to make the first move.
Yeah, definitely, Matt. Matt, I was laughing a while ago because Acleda was my part of my portfolio when I was in IFC. So I've been pronouncing it as Acleda. So I learned from you. But beyond the other things we're learning from you right now, definitely you also mentioned cross-border data sharing, that you have to start over every time you move to another country. I think that's something that also needs to be given attention. Definitely in the Philippines, there's still that default of banks looking at hard collateral. For women, Chris, you must agree. I mean, there are certain countries where women don't even have the legal right to own land. So really, there's a lot that can still be done, appealing to our financial executives here, help the Personal Property Security Act move forward in terms of being operationalized, because it opens up lending based on collateral other than land. To Matt's point, the cash flows and others. Kamrul, in ASA Philippines, I mean, glad to hear about the assistance you're giving, 0% interest. Do you think this is, I mean, how long will you be doing this? I mean, dole out sometimes, it's not a dole out, but is it a sustainable thing over time? It's needed, no question. But where's the balance here?
Thank you. I think it is actually questioned by everyone. To do something sustainably is important. So to what extent we can give interest-free loan? In our case, the 5 billion I have mentioned, I don't think it is actually enough. Though definitely it is sustainable for us because it's only 5% of the total disbursement that will be happening this year. Our total disbursement target is 100 billion pesos, and only 5 billion will be giving subsidy, right? So given the interest rates in the microfinance sector and the high costs, we still believe that it is manageable for ASA Philippines, not only ASA, even for other microfinance institutions, same. But my board is actually asking, why don't you do even more? Why not even 10%? So I'm actually looking into that. Probably next year, we might actually increase it to the 10%, so that the sustainability we have achieved with the help of our bosses or our poor client, we will be returning it back, probably between 5 to 10%. So in short, to answer your question, of course, you have to be careful about your math. And as long as you see that your finances are, your calculation is correct and you're doing it on a sustainable basis, you should do, and you should be doing it. And that's how ASA's philosophy it is today.
Yes, thank you very much.
We'll be doing it as long as our clients has not been recovered, both from the pandemic as well as from the natural calamity in the areas that have been hit.
So I think it's just a matter of defining the right mix of risk appetite and portfolio, and yeah, so it can work. I think one of the major things for bringing you together, regional players, influencers in the financial, or global players in the financial inclusion space, is to get benchmark country experiences, lessons learned, lessons of experience. So Chris, in the space of financial inclusion, what is the right mix in terms of, especially on the gender side, gender lens, what is the right mix in terms of enabling policies, private sector support, government intervention? I mean, what have you seen across the various countries you worked in? This question will go around. Each of you will answer. I hope has a comment on it. Chris, over to you.
Great question, Gay. I mean, I think you know, it really always has been a mixture of putting people together to put, you know, the government policymakers in touch with the financial services partners. And also at Women's World Banking, we do research because, you know, governments don't want to make policies without data. They want data-driven policymaking. So the right mix is that. In Indonesia, we launched in June what they call the Indonesia Women's Digital Financial Inclusion Coalition. So we're working with the Ministry of Women's Empowerment, Women's World Banking, and in that we have many ministries, but we also have large financial services partners like DANA and BRI and CSOs contributing to that coalition. And so it's getting everybody on the table and deciding what are the key issues that we need to fix. So as an example, I'll stop right here, but just, you know, agent banking. It's so important in a country like the Philippines and a country like Indonesia, huge geography. So you need to have easy to set up agent banking and non-bank agent banking. So you don't just have to have agents that come from a bank, but perhaps they're at 7-Eleven and they're trained to be an agent. So that's one, you know, key thing that came from, you know, comments from the banking sector saying, look, we can't reach everywhere, so we need more agents. So that would be my suggestion, a mix and figuring out where government can help the financial services make progress.
Thank you very much, Chris. Matt, over to you.
So I already talked about the important role of creating that. Government has to play a part in creating that digital infrastructure and the laws and regulations that legitimize it so it can be used properly and you're not stuck in paper in-person transactions when you don't need to be. Of course, that has to be done with commensurate laws to protect privacy and protect data, right? Because with digitalization and things moving faster comes cyber risk, and that I'm not trying to say that should be ignored. Now, on top of that, we should be, as Chris just suggested, we need to be encouraging in the broadest sense non-bank players into the business of dealing with the base of the pyramid, whether they're enterprises or individuals. Not because they're going to take over from banks, but because they don't have the legacy, they can drive innovation. But if it's too difficult, if the government is too precious about giving non-deposit taking institutions licenses to experiment, then you discourage that multiplicity of players in the sector and you discourage innovation. And finally, you have to improve the nation's data resource so that as things move along, you can be seeing, year on year what's happening, and you can be making, because we don't have the final solution for all this. I'm not trying to suggest that there's one formula for every country. I'm talking about trends that we need to encourage. But if we don't have data, we can't see how we're doing. And how can we have responsible policymaking if we can't measure what's happening on the ground?
Definitely. Thank you, Matt, as always. Thank you for those very useful insights. Simon, over to you.
Okay, it's been a real challenge, I think. Part of it is, can we develop with the government a biometric database that we can then use and eliminate the cost of mobile phones and cards, and be able to use your face or use your fingerprints to pay, right? And we see that being done in India. We see that being done in Indonesia. And part of the challenge really is, today, most people look at biometric for authentication only, right? And, as we move in, but you see China now, you can walk up to a kiosk and pay with your face, right? And so there's that sort of development that, may reduce the cost of the payment transaction eventually. But then it comes with unique challenges for women. I think sometimes, especially in Muslim countries, for example, if it's facial recognition based and they have to wear, the head covering, and it's just basically periocular, that, that's a very different technology from scanning your whole face, right? So in terms of developing the new technology, I think we need to, as Christina mentioned, we need to keep a close eye on that gender sensitivity to make sure that what we develop doesn't have the unintended consequence of excluding women and other people. And I think the other challenge for all of us is really how to inculcate a culture of failing fast and learning faster. As Matthew mentioned, and Christina did as well, most governments, central banks, they like data, right? But if nobody tries it, there's no data to try. And really, that's going to fall on the shoulders of private sector, and be able to take on those cudgels and run the pilots or do the prototypes, of course, with the blessing of the central banks normally, right? I think the other challenge we have as FINEX, being all the players here in the Philippines, how do we, I guess, cooperate with one another in certain aspects, take a co-opetition type of approach to the market. There are certain things, as Matthew mentioned, like open banking, open finance, where we can cooperate and share data while still competing and maintaining the benefits of having the market to drive down the costs, right? But without that framework, it's very difficult to do on a bilateral basis, right? So it really has to be a multilateral or a platform basis, that the central bank puts out. And so I think a lot of times right now, we feel like we're prophets in the wilderness, talking about open banking and open finance in the Philippines so far. And we'll see how things develop. I suspect the central bank will likely take a wait and see approach, and then as they see traction being gained and the system is stabilized, they'll start incentivizing, coercing, pressuring, otherwise cajoling people to join the open finance platform, much like they did with InstaPay and PesoNet in terms of the real-time payment rails. So that's kind of where we see, I guess, how we can all work together to accelerate financial inclusion.
Thank you, Simon. Kamrul, over to you.
Yeah. Yeah, in our case, I would say that we are much behind in those digitalization or digital transformation process. But we are trying our best to understand how do we cope up with the constant changing environment. If you look at our total clientele, probably between 2 to 5% of our clients probably are ready to take the digitalization process or would like to go to the digital platform. And yet there are so many challenges. National ID has to be given to everyone, even to the remote areas. That's the one. And the SIM card registration has to be established. Without these two things, I don't think we'll be able to get there. And then how do we make it available in every places, the cash in and cash out? Because somebody has to convert this digital money into the cash money to roll it. Even for the payment, somebody has to take the cash money to convert it and to pay it. Because in the Philippines, to have it 100% wallet, e-wallet, it will take us many years to be there. So we are actually trying our best to be there. Probably our time frame is 2 years from now, we should be digitally ready so that in a changing environment, we are also exactly the same to the others. Couple of days ago, I was in a small meeting with the MVP and his CEO of Maya Bank, Jello Madrid. And Jello Madrid was so proud to say that, Mr. Kamrul, I have never seen one of my clients, and I don't have to. He has 700,000 clients. But in our case, not seeing a client, meaning we are dying. We should be dying, right? So two different business process. So every institution will have its own proposition, and ASA has its own, and its own challenges. In our case, we will not be able to compromise our relationship with the client by any means. So digital transformation process is actually a added cost for us Philippines. So our challenge is today to understand and find a system where we will be able to keep cost at a level that we could tolerate it.
And Gay, forgive me, I have to jump in here because this is exactly why the SME Finance Forum exists, because you don't have to figure this out on your own. We would be happy to introduce you to Dr. Jani, who's run ACLEDA since its beginning. You see, I'm even saying it wrong still. And they would be happy to host you in Cambodia. So would Equity Bank, which used to be an NGO, a building society in Kenya, who've done a similar journey. There are many of our members that are struggling with the same issues that you're struggling with, and they're happy to share. And it's not that what they do is exactly what you should do in the Philippines, but if you have the benefit of seeing what others who are a little bit ahead of you are trying, you'll make better decisions and you'll shorten that process of making the adaptation yourself.
Yes.
That's correct, That's correct.
Thank you, Matt. I think this is the whole point too of bringing people together here. So we walk out with concrete collaborations. So I just want to close. I mean, it's unfortunate we've reached the time, but this is a very rich discussion. As you know, financial inclusion emerged as a global priority in the late 2000s. Back then, the meaning was confined to access to a wide range of useful and affordable financial products. If we believe that financial inclusion can indeed alleviate poverty, we cannot solve our problems with the same thinking the way we used to create them, according to Einstein. So financial inclusion cannot be seen in the same lens, otherwise it will not affect the much needed transformational change today. Financial inclusion is about SME finance. It ought to have that gender lens, because as everybody discussed here, I mean, you empower one woman, you empower the whole household. I mean, the context of the Philippines, I've said this before, women are ilaw ng tahanan. They're the guiding light for every household. So just imagine, if you empower one woman, there's a multiplier effect. And in this all, fintech and MFIs remains to be effective means to achieve sustainability through financial inclusion. Thank you very much to my dear friends, Chris, Matt, Simon, Kamrul. Thank you for continuing to be the influencers, the wisdom behind the driving force for financial inclusion, not just in the Philippines, but globally. Grateful. Thank you very much. Over to you, Tony.
Thank you.
Thank you very much, Gay, and thank you very much to all our speakers. Thank you very much to Matthew, to Christina, to Jamrul, to Simon. And FINEX will be giving a certificate of appreciation for you. It will be sent to you, I think, virtually. I'd like to ask the Secretariat to put on the screen what the certificate of appreciation will look like. Okay, so this is the certificate of appreciation. It's just happens to have Mr. Matthew Gamser's name in it, but each one of you will get one virtually. Thank you very much for coming to us. This now closes our day 4 of the FINEX conference.
Tony Boy, if I may, just to formalize the I guess giving of the certificate of appreciation. So as mentioned by Tony Boy, we will be sending over the certificate of appreciation, but allow me to read this. So the Financial Executives Institute of the Philippines presents this or these to all of you, certificate of appreciation to Matt Gamser in recognition of his generosity in sharing his valuable time, knowledge, and insights as a speaker in the FINEX Week annual conference with the theme Financial Inclusion as Enabler for Transformational Change, given the 6th day of October 2022 via Zoom, signed by yours truly. So thank you very much, Matt, for always agreeing to grace our events. We continue to appreciate all of the updates and all of the global movements that you've been seeing. Thank you, Matt. And then it will be a very similar certificate of appreciation for Christina. We'll make sure that it's updated appropriately. But again, please expect our certificate to be sent over. And then to reiterate, we truly appreciate the sharing that you did this morning to all of the members and the participants. And we hope to see you not just in a conference, but in our more regular work schedules. And then let us know next time that you get to visit the Philippines. So thank you very much, Christina.
And I just wanted to say, it was really interesting to learn from Simon and Kamrul and get up to speed on the Philippines, since COVID hasn't allowed me to travel recently. So thank you so much.
All right. Thank you, Christina. And then also to our panelists. So we'd like to thank you, Kamrul, Mr. Kamrul Hassan Taraf there. You truly added value and texture to our discussions this morning. And since you're Philippine-based, I also hope in my day job, we'd be able to see each other. And as you know, FINEX consists of financial executives and professionals going and moving around the country, the Philippines. So I'm sure our paths would cross pretty soon, and I'm looking forward to that. Again, thank you very much for gracing our event, Kamrul.
Thank you. Thank you.
All right. And then hopefully we still have one for our FINEX member. Thank you, Simon. Always a pleasure seeing you in the Philippine conferences, not just those that are organized by FINEX. So thank you for sharing with us your insights and very personal experiences to add more context and a wider understanding regarding financial inclusion and helping the country in general. And in addition, I presume, Simon, you're still the chairperson of World Vision, right?
Yes, that's correct.
So Simon continues to be very active, not just in financial inclusion, but in helping uplift children's and people's lives in general.
So we're truly blessed by your presence here, Simon, and we hope to see you either virtually or in person pretty soon. Thank you very
Thank you,
much,
Mike.
Simon.
Thank you very much.
All right. Back to you, Tony Boy. Thank you.
Well, this now closes our day 4 of the FINEX Week Annual Conference. Please join us for day 5, which is the emerging Asia Pacific giants tomorrow at 9 o'clock a.m. Thank you very much, and have a great day ahead.
Thanks, Tony Boy.
Thank you.
Bye.
Thanks, everyone.
Thanks,
Thank you.
everyone.
Thank you, everyone. Thank you,
Thank
Gil.
you.
Thank you. Bye, everyone.
Thank you.
Bye.
Bye-bye.
Bye-bye.
See you in a bit, Mike.
See you later.